2020, it is continuously going on every Friday without any fail, except on the holidays. So we are trying to bring out some new topics which are very important for the professional, something new happening. So this time we have selected Gift City, India's gateway to global finance. Now, as you are aware that this is for my all participants, that the IFSC, that India's International Financial Service at Gift City, we are using word Gift City for easy understanding. That is Gujarat International Finance Tech City. So that says Gift City is redefined the India's position in the global refinance ecosystem. Designed as a world-class financial and technology hub, Gift City offers a global, competitive, regulatory, and tax environment that enable business to access international market while operating from India. So in Indian jurisdiction, you have another parallel jurisdiction. This webinar will explore how Gift City is emerging as a preferred destination for global financial services, fintech innovation, this fund management, banking, insurance, capital market, aircraft and ship leasing, and sustainable finance. Industry expert will discuss today the opportunity, regulatory framework, tax incentives, and strategic advantage that make Gift City a catalyst for India's ambitions to become a global financial powerhouse. So friends, whether it is a financial institution, fintech company, startup, investors, multinational corporation, or professional looking for understand the future of international finance in India, this session will provide a very valuable guidance, insight, how the Gift City is evolving and how this ecosystem is developing in India to becoming the global hub for financial market. So today we want to discuss understanding Gift City and IFSC, why Gift City, tax regulatory advantage, and we will discuss, is it only that advantage or something bigger? Business opportunities in Gift City, investment landscape, fintech and innovative ecosystem, and success story and case studies that we'll discuss. And then we will have a question answer, which I have received and people are sending. So I extend a very warm welcome to our distinguished speakers. First, I welcome our chief guest of today's webinar, Mr. Pradeep Ramakrishnan. He is Executive Director at IFSCA, Gift City. He looks into Department of Capital Market and Department of Metals and Commodities. He has 5 years experience in private sector, more than 23 years of experience in regulator. He is specializing in regulatory framework on ESG, corporate governance, listing related issue, debt market and fixed income market. Before IFSCA, he was in SEBI for more than 22 years in the division of issues, listing, debt market and various other things. And I am a personal fan of Pradeep, the way the strongly he puts his point and the clarity of thought and the intelligence he possesses. I welcome Pradeep for this program, and we will definitely get advantage of your knowledge and wisdom and your bridging between the SEBI understanding of capital market and the Gift City. It will be a big boon for Indian market that you are heading that particular thing. Thank you very much joining us. And I extend a very hearty welcome to our other learned speakers and panelists. First is Shubham Goyal, is a Deputy General Manager of Division of Corporate Finance in Equity Department, IFCA. Then Aditya Sarda, he is Deputy General Manager of Division of Fund Regulation in Policy and Regulatory Department in IFCA. Then Chandan Satyarth is a Assistant Manager of Division of Market Infrastructure, Institution and Registration and Regulatory Approval Department of IFCA. I welcome all my 3 other panelists for this program, and your knowledge and your work. This will be helpful to everyone to understand that what is happening in the Gift City. Then I welcome Anjali Agrawal, Partner Head Capital Market Service Corporate Professional. She looks after the Gift City also with the capital market services. Friends, this particular thing we have seen, I have just given a few slides. The question, which is that why people are asking so many questions related to GIFT City, that what is this GIFT City? So I have prepared few slides that India's global financial architecture from economic participant to global architect. This is the basic theme. Next, the 3 decades of extraordinary transformation we have seen. Our GDP is going up. Our entrepreneurship through startup, another thing, is taking global shape and solving India's problem. Capital market is one of the biggest or largest in the world, one of the largest in the world. It is happening. Now, the most important thing is the biggest we have, our GDP is growing, our entrepreneurship is growing, our market is growing. But biggest paradox of Indian capital market is that despite of this, we are we don't have a sophisticated international financial transaction. For that, India had to look outside its own borders. We are not providing anything from India. We have to go to Dubai. For aircraft leasing, we have to go to Ireland. For global treasury, we have to go to Dubai. Investment fund, Mauritius, Singapore, Luxembourg. Ship leasing, it is in Singapore. So India is creating business, and global finance were being created somewhere else. This is the paradox situation of Indian market, and these are not for particular country. These are the, like Ireland, entire world aircraft leasing taking place at this place. Next. Then come to the why should Indian enterprise travel abroad to access global finance? Why can't global finance come to in India? So this is the fundamental question gave birth to GIFT City, that why we are going out. Now, the GIFT City is a new jurisdiction on Indian soil. It is not merely another city. It is not merely another special economic zone. It is not merely another stock exchange. It represents an entirely different financial jurisdiction. So Indian soil, there is a parallel jurisdiction is there, which is there. Now, the next point is that if you compare, Shivam, next. So domestic engine and global gateway, Indian domestic market is there, but this GIFT City connect India with the world. In domestic market, we work in rupee, but globally we convert foreign currency and we deal in foreign currency only. Domestic regulation applicable to Indian company by international financial standards applies here. So for the first time in India, we have a two financial parallel ecosystem running. One is Indian and one is through GIFT City. So this is very unique proposition has come. Now we have heard that Bombay is the place for financial hub. So now GIFT City is also making, so this is a competition. So it's not a competition, it's a complement. They're not competing, but they are complementing each other. So next phase of India's growth will be driven equally by manufacturing service, which is taking place. But now financial services, another global opportunity will come in India by this way. Now, next is, if you see this, the architecture of global hubs, what is happening, which I have just told. World-class financial ecosystem that attracts global capital, and it is taking place in London. It is not that they were the powerful, but when they have a trade, it is they have a world-class financial system. Same in New York. It is not that they are the manufacturing place, but they are become the financial hub. Singapore, the prospect not merely because of the geography, because they have a surrounded by sea and other thing, but their own financial hub, and they are one of the best in the world. And then Dubai, it is not because of the oil, but because of providing financial services and providing various advantages that has come. The blueprint of global capital market, global capital, if we see, this is exactly where India is attempting through GIFT City. There should be vision, and the regulation follow vision. Then regulation, confidence follows regulation, and confidence that capital follows confidence. So that is the global capital's structure which is coming. A complete international ecosystem, if we check, then we'll find it is not Shivam next. It is not only tax incentive. It is global fund management, international banking, aircraft and ship leasing, insurance, bullion exchange, fintech, global treasury, sustainable finance, and international arbitration, where the Singapore is hub today. That is the basic purpose. So you can understand GIFT City is not just advantage of tax. It is providing the entire structure. And the most important thing has taken place, the most transformative reforms which is taking place. Next, the direct listing of Indian companies on an international exchange from India itself. So if you want to go to international market, earlier we were going to UK, we were going to Canada, we were going to the USA and Singapore, other places. Now here in India, through GIFT City, you can list your company internationally. Now, the most important change, which I showed in the first slide, that Indian were going out, but here we represent that fundamental shift in thinking is that now Indian companies to go abroad, India is inviting the world to come here. So whether it's in New York, Singapore, Dubai, London, which are the hub, they are coming here and they are doing. So next decade of financial reforms will be like this. Can we compete with Singapore? Answer is yes. Can we complement Dubai? Answer is yes. Can we emerge as Asia's next international financial gateway? Answer is yes. What role will professional play? That is very important, and that I will request Pradeep and his team that they must tell us that what are the role for professional, so people can come in this ecosystem. What opportunity will emerge for Indian business? That is tremendous. So these are the next decade of reforms, and then next ambitions will be that economic leadership without financial leadership is never complete. So economic leadership with financial leadership is important. You can become economic leader, you can become manufacturer, service provider, everything. But if it is not financial leadership, you are incomplete. At the last, this is not merely about understanding regulations. It is about understanding the future direction of India's strategic transformation. So this is very, very important development which has taken place, and that's why we, the entire team of GIFT City, those who met us for these particular issues are there. And before starting and giving mic to the Pradeep, I will just request everyone that our next webinar is on 10th July. That is our 270th webinar on decoding term sheet. So the program structure will be like this. First, Pradeep will speak and he will give his comments as a chief guest. Then Anjali will talk about certain things, and then Shubham, Aditya, and other people will speak about this particular topic. So without taking much time, Pradeep, I will request you, please tell us what is happening, where we have reached, what message you want to give to Indian corporate, professional, and other people so they can take advantage of this particular the development which is future. Over to you, Pradeep. Unmute, please. Pradeep, you have to unmute here.
Sorry, thanks. Thank you for inviting us, and thanks for a very glorious introduction. I just wanted to before we start, just say that Chandan may not be able to join because there is another talkathon that we have scheduled where he is also participating in IPSCA. So
Okay.
he'll be able, of course, Aditya and Shubham have enough ammunition to keep everyone engaged for the next hour and a half.
Okay, no problem.
Yeah. So what I would like to do is probably give you a small presentation.
Yeah.
Just to say about what exactly we have done and where we are. So I think a lot of introduction has already been given by Pawan. particularly the whole thing about India and international business. So we are very rightly, as very rightly said, we are not here to compete, of course, and India will obviously not create a competitor for itself. It is to complement. And first of all, the businesses that are being done here are completely different from the businesses that are done there. Right. So we do international business and we do business that is there in the IFSC. Business is done in the foreign currency only. We don't do rupee business. Right. So there are multiple differences between India and IFSC. As we speak, in fact, India's this IFSC has become the most preferred borrowing destination for ECBs as far as Indians are concerned. 70% of India's ECBs are actually done here. In fact, this month has been a record month so far. In just this month, almost 1.6 billion worth of bonds, dollar bonds have been actually raised by the Indian corporate at this place. So I mean that's actually to say that where we are going. Now, if you look at the slide, it just shows where exactly we are now. When I came, I was with SEBI for 22 years, and after from SEBI, I moved here. It was in 2024 February. Hardly a few buildings were here, but now if you come, there are some 40 odd buildings that are being built. There are many of them are in the various stages of getting occupied. Maybe in the next 6 months, you will have many companies which are there. So it's just a small, thing called GIFT City is nothing but a small enclave. It's around 900 acres, and out of this 900 acres, almost 300 acres is what you call as an international finance center. The remaining 500 are, what we call as the domestic tariff area. So otherwise, I think, I mean, all the business, the IFSCA, as we talk about as the regulator, is a regulator that actually lords over only this 300 acres, what you call as international city. Now, how has this been developed? So now, if you look at Canary Wharf in England, it's set up as a separate enclave. While there, of course, there are no separate tax incentives, but there are other incentives and including infrastructure related things that the government gives. But similarly, in Dubai, you also have a domestic area, you have an international area. So we have sort of modeled the GIFT City similarly, and the idea is largely to bring international business here. So essentially, the IFSC has been established with three main objectives. One is to bring international business back to India. Many Indians at some point in time, because of our adoption of a socialist model of economy until perhaps 1991, have actually gone out. And we have also adopted liberalization with a pinch of salt. It's not completely liberalized also. Now, of course, other than railways and defense, we have almost thrown everything open recently. We even had 100% investment being approved in insurance sector. So that way, I think we have now got liberalized completely. But otherwise, I think what we have been able to do is we have been able to sort of create infrastructure for people who want to do international business. The second one is to be a hub for raising funds, right? I mean, to be a hub for capital flows, right? And the third one, as is the need with any international business center, is to be a hub for innovation. So these are the three broad objectives with which the IFSC has been brought. So can we go to the next slides? Yeah. So as you can see, this particular slide shows how we operate. Now, for companies that operate here, there is a 20-year tax holiday. And the 20-year tax holiday is for the first 25 years. You can choose the first 25 years of application. It actually runs continuously from the year that you choose. But we are not a country or a separate place with a separate flag. We are very much a part of India for the purpose of income tax, even as a territorial integrity is concerned. Business happens only in international currency. 15 currencies are permitted, though the bulk of the business happens in the dollar only. And there are certain carve-outs, which, for example, the Income Tax Act applies, the Companies Act applies. However, certain carve-outs have been given under these acts, right? And until 2019, there were different regulators, the domestic regulators like SEBI, RBI, etc., were actually the regulators for this place also. Now, we know how difficult it is to have to make different regulators come together. So what has happened is that in 2020 October, the IFSCA came into being, and it is a unified regulator for this place. So the other regulators, I think, will not be having any oversight over this enclave. So this is how this whole structure has been sort of designed. Now, while we set out to create regulations, it was initially we thought there will be only four major verticals, which is capital markets, banking. In fact, the banking regulations were the first regulations here, and then we thought insurance and then pension. But then as we grow, we realize, and I mean, as we grew, we realized, and as we grow, we continue to realize the fact that an international city actually has a lot of components. It's got just like a vehicle has got, a lot of moving parts. An international finance center has a lot of components, and they are not just, cannot just be bracketed into these four. So as we speak, probably around almost 30 different verticals are here, and they are like very varied things, like including aircraft leasing, ship leasing. We have got stuff like bookkeeping, accounting. Company secretaries have a lot of opportunities here. You can be principal officers, you can be compliance officers, or you can even do international business like KPOs, LPOs, etc. from this place. And we have brought almost 40 odd regulations, and all these regulations are sort of revisited every, probably, I mean, they're revisited every 5 years as we speak. So I'll just show you some numbers before we go, and because the important two important presentations of the day are by Aditya and Shubham. Shubham will be speaking on listing and other matters, and also about the stock exchanges. He will give a lowdown, and Aditya is going to give the lowdown on the most vibrant vertical here, that is the funds vertical. So here, if you see over a period of the last 5 years, what has happened, we have got almost 41 banks. We have got our own stock exchanges. We have got our own clearing corporation, depository. We have got almost 220 odd capital market intermediaries, including almost 100 brokers. And the fund industry, actually, the numbers are very telling as to how vibrant it is. Almost 400 funds. And we register fund management entities. And one of the things that we also have to do is to be a beacon of innovation for domestic regulators, which we have been. Certain things like co-investment, and including things like fund management entities. These are all concepts which are also being explored by domestic regulators, learning from our experience, because we are supposed to be like some sort of a sandbox for the country itself. So we also have a vibrant insurance, particularly reinsurance, and we have got good number of insurance intermediaries who have taken flight. And one of the things which is also interesting is we have an international bullion exchange. Almost 100 plus tons of gold have been imported through this jurisdiction, including 1,000 tons of silver also there. And as I told you, we have got quite niche verticals like foreign universities. There are 5 foreign universities here which offer international courses at almost half the price, international price. You get the same degree, it is valid. Your sons and daughters, and probably even you can come here and study, right? And in Ahmedabad, in an international course. So then I think, do we have any more numbers, Aditya? I think, or probably I'll stop here. Yeah, okay. This probably is the last slide. What I'll show is that if you see, there are almost 1,200 odd registrations which are here, which means 1,200 entities that have got registered with us. So we have a stock exchanges which Shubham will be explaining as to what they are. Almost 103 billion worth turnover. In fact, just last week there was a record open interest on one day, almost 21 odd billion actually was there. And the debt listings are quite good. As I told you, this year I'm sure we'll have good numbers. And we have got good banking transactions are almost 51 billion just in 1 month. And the banking asset size is almost 114 billion. And I can tell you that this place is the most preferred place to raise ECBs by Indian companies. Almost 70% raise it through this place. And of course, when it comes to bonds, sustainable finance is also something which probably, Shubham will throw some light on where we are, because unlike domestic India, sustainable finance has been quite a big hit here because of the fact that we allow international taxonomies. So what I will do is that I'll stop here because I have one more meeting to attend. But I would like to really thank CP, because CP has been doing this non-stop. I really, first of all, admire their enthusiasm, and also compliment them on the fact that these webinars being free serve to increase the knowledge of professionals. And I would also like to say that for company secretaries, the ICSI has brought 2 certification courses presently, and we are in the process of bringing a third one, and that is one is on fund management, and the other one is on capital market intermediaries. Now, even if you want to just gain knowledge, these courses can be, you can go through these courses. And in case you want to work here, then these courses actually become mandatory. So this is something which I would like to leave the viewers today evening, and I would like to wish you all a lovely weekend.
Pradeep, before going, I have just one and two questions relating to you.
Yeah.
Where do you see GIFT City in next 10 to 20 years, and what role will play in India's aspiration of becoming global financial powerhouse?
Yeah, these are all questions like ChatGPT questions I won't answer. But what I can tell you is this. See, the thing is, the government is quite committed as far as this thing is concerned. And if you see a trajectory, the amount of business that has come out of this place actually has grown, right? And secondly, if you look at the incentives, the government has already indicated the willingness, because earlier there was no tax certainty. There was a limited tax certainty because you had only 10 years, and people are actually asking what happens after 10 years. So now the government has actually said that you get it, you increase it to 20 out of 25 years. And they have also said that after 25 years, then you have a tax bracket of 15%. So which means that the government is committed as far as this place is concerned. So the only way is up, but what is important is how do we make it vibrant? So very good part of your question is, where do you see it, right, in 20 years? So I see it as a very vibrant center as long as we continue to innovate, we continue to listen to what the intermediaries want, because the way we do business here is completely different, though not wholly different, a lot different from how business is done domestically, because there is no captive consumption. I actually compete against London, I compete against Dubai, I compete against Singapore. So someone is going to ask me, why should I set up business here and not in Singapore? Right? I need to bring that X factor. That X factor is what is going to sort of help GIFT City. So from what I can tell you is that now it's almost 3 years since I have joined, and I have seen that businesses are actually growing in all verticals. And when businesses are growing, it's not just businesses. The number of people here, we have got almost 20,000 plus people who are working here, which is actually a testimony to the fact that it is such a vibrant ecosystem. And not just that, I think now there was one point in time when we had to introduce GIFT City, right? Now everyone knows what GIFT City is, which means that it's a testimony again to the fact that people are noticing what it is. Now, what is important is we have to keep it vibrant, we have to keep it attractive. So if we are able to constantly innovate, if we are able to constantly be in touch with the world, and also one of the things is we also have, like for example, is a mandate to look at our regulations repeatedly, right? Continuously. And the reason why we have that is that it has to be tuned to the happenings in the world. I can give you one example, and Aditya probably can throw better light on this. We brought in the fund management regulations in 2022. We revisited this in 2025. We brought in this new regulations, and this was brought in February 2025, and we were quite happy with it. You will not believe, within 3 months, we had to look at new things. Of course, what we brought was already there, but the world changes so much. While we are looking at how money is going to come here, we're looking at PSP. Suddenly, people are talking about digital assets, right? People are looking at tokenization. If you look at our consultation papers, they are a little different because they are sort of tuned to what we are doing. And as we speak, in fact, I'm quite excited about a consultation paper that could come out very shortly that will be on how to get listed without a public offer. So we are actually looking at something like that. So these are all things which we are doing to make this place a little different and also in tune with how the world sees it. I can give you one more example before I go. Singapore has been around for 50 years. London has been around for almost 200 odd, 300 odd years. But London had to do an internal inquiry, because there were only 4 public issues last year, right? So they had to say that despite being one of the most vibrant ecosystems in the world, Singapore had to sort of look at how they can incentivize, raising of funds in Singapore. So it's like actually nothing is certain. So even if you actually become a good ecosystem, we have to constantly innovate, and we have to be in touch with onboarding. People look at very ease of business. People look at cost of capital. People look at speed, right? If they are able to keep continuously achieving these 3 objectives, I'm sure we'll be able to really make a name for ourselves. That is what I feel.
Pradeep, my last question to you, because
Yes.
I know you have to go. You are working in debt market division in SEBI. So how the debt listing is different here and debt listing in SEBI?
So the main thing is the credit rating. Okay, so the thing is that in the credit, the bonds here are also mated with the country's credit rating. If NTPC raises a bond in India domestic, it is like you may get a AAA. But if the same in NTPC raises a bond here, it may be have to be satisfied with a triple B plus, right? And the reason is because India's credit rating is mated to the company's credit rating when you raise money. So to that extent, there is a huge difference. But when it comes to disclosures, we are completely different. We leave it completely to the investors because we know that almost 99% of all the debt raised in the world is private debt. And we also have, as far as disclosures are concerned, post-issue disclosures are also quite different. But when it comes to sustainable debt, this is where perhaps where the IFSC has stolen a march over domestic India, because I had also worked on the domestic bond ecosystem and the sustainable bond ecosystem there. So there, though we brought in a definition, some sort of a taxonomy for what are green bonds, for various reasons it was not taking off. So when I came here, what we have done is that we have said that we will accept all international taxonomies. So what exactly is this? Is that if suppose there is a definition of green according to someone in Europe, that person is actually going to put in funds to someone here who is adopting that taxonomy. So that has actually helped almost 50 different issues here. So these are all things that we have actually been able to learn. But one thing which is also there is that while domestic bond ecosystem will be perhaps more affected by RBI's interest rates, here the bond ecosystem also is a lot more cyclical and impacted by other interest rates, including other international movements, including the World Bank's thing as apart from the American US Treasury rates, etc. So that way, I think the impact is a little more. And one last probably point of difference, probably which actually comes to my mind is that an international borrowing happens only when you want to go for international borrowing. So it does not actually come like a normal borrowing that actually happens in the domestic thing. So a preference for an Indian company will always be for domestic borrowing, owing to the fact that there is a currency risk that is actually attached to it, which is not there in this case. However, what we would want is that the debt market ecosystem is slowly attracting the eyes of international borrowers, international companies, right? So we have already got Sri Lankan, 2, 3 Sri Lankan companies who have raised debt, who are listing here. We have got inquiries from Nepal. We are getting inquiries from Bhutan. We are also getting inquiries from Southeast Asia. We would like to be one of the hubs for the global South. See, one of the things which is quite interesting as far as borrowings and everything that funds are concerned, the West, as we see it, whether it's a London or a New York or a Singapore, they actually cater to really big borrowings, right? If I'm going to borrow in Luxembourg, the cost of a 500,000 borrowing is almost 10%, right? Whereas here that is not the case. So that actually is a could be a big USP. So I believe that these are the things which could perhaps attract non-India companies to borrow out of IFSC. I would like to tell you probably 1 year down the line, if we have a similar webinar, 1 year down the line, probably I would like to tell you that there are more foreign companies that have borrowed out of this ecosystem than probably then where we are going is perhaps the right way.
The capital market is seeing this.
Yeah. The capital market is seeing it, and our numbers are out. We would publish a quarterly bulletin. I request all of you to read it. It is available on our website. It gives a lot of numbers. And
Okay.
by the way, since you also said about the debt market, while so there are two publications that we have brought out on our website. It is there available for free download. One is the debt market ecosystem, and the second one is the sustainable finance ecosystem.
Okay.
These two things will actually give you an insight about how the debt market operates in the IFSC.
Okay.
Sir, I have just one small suggestion. Hi, Pradeep.
Yes,
Pradeep, with regard to the consultation papers which you were talking about, I go through the IFSCA site and SEBI site on a regular basis. SEBI ka koi bhi consultation paper becomes public immediately. It's there in almost all the media. But IFSCA ka koi bhi consultation paper, it doesn't come to the public notice at all. Generally. I'm not able to see. Honestly,
So
I've not given
the
any
reason
of
is
the
actually it
suggestions.
affects a different set of people. See, the thing is, no, what actually becomes popular is more about the fact that, of course, there are two things. One, of course, is also about the fact that there is awareness. See, the thing is, for example, if suppose there is an IFSCA paper on on borrowings, only when a company is going to borrow internationally will it actually be affected by it, right? So that to that extent, maybe it may not be relevant. This is
Relevant.
something which is there even in other places, like, right? So even in other places like Dubai, there is a domestic ecosystem, there is an international ecosystem. The international ecosystem is commented upon only by those people who use it. And I think probably Aditya can also throw some light and Shubham can throw some light on consultation, because recently Shubham's one of the consultation papers of Shubham actually received a best award. I think that was on the listing ecosystem. It achieved the best consultation award. So I have to ask him what magic he did to achieve that award. So there must be something to it. So probably he can also throw some light on that. But otherwise, I think the reason is the consultation paper. One is, of course, we try to do a lot of outreach. We also try to do it through our social media platforms, etc. But since it affects a different set of people, which anyway, who are anyway less in numbers. See, when you compare to the huge size of India, 6 lakh companies and all that. So the universe which this affects is lesser. So that could be the reason. That could be one reason. But if there are ways in which you believe that we can propagate, at least create an awareness, please let us know. And thanks for being one of the platforms where we are actually being able to sell about GIFT City.
Thank you very much, Pradeep.
Thanks a lot. Thanks a lot for this opportunity and all the very best.
We will continue, and whatever point will come, the questions will come, we will definitely pass on to you.
Sure.
Thank you very much, Pradeep.
Thank you.
Okay. Now, we are moving further. I'll request Anjali to give a short presentation, and then Aditya and Shubham will speak on this. So Aditya and Shubham, Chandan's role also you have to play. That is my request. Yeah, Anjali.
Yeah, sir. Is my presentation visible?
Yes.
Yeah. Hi, everyone. First of all, a big thanks to Pawan sir for giving the introduction. I just loved the way Pawan sir explained everything. And a big thanks to Pradeep as well for explaining the vision and mission of the entire GIFT City thing. If you'll ask me personally, I just love this acronym GIFT. Actually, it's a gift to the Indian corporates who want to go global. And for various reasons, they were earlier not in a position to do that. But now there is a platform available to each one of the companies wherein they can raise funds through the outside, through the NRI world, and go and grow in space. So the most important aspect, Shubham, I know Shubham will be taking up this in great detail, but I'm just covering the basics of the direct listing aspect. When we talk about direct listing, companies listing of equity shares jurisdiction rules came in 2024, which permitted the the companies in Indian space to get listed in the permissible jurisdictions. So when we talk about permissible jurisdictions, this allows eligible Indian companies, eligible is an important word here, to get listed to issue equity shares, including OFS, directly on the international exchanges. We all understand that when we talk about listing in the Indian space, in the Indian system, it is all about listing on BSE or NSE by way of an IPO or an offer for sale. But here, if you want to get listed on international exchanges, earlier the requirement was that you have to get listed on first the Indian exchange, domestic exchange, and then only you'll be in a position to go international. But by virtue of these rules, this has been simplified. A permissible jurisdiction presently is IFSC. Now, when we talk about the definition of permissible jurisdiction, we have covered. There are two exchanges as of now presently existing in IFSC. One is India International Exchange, INX, which is a subsidiary of BSE. The other one is NSE International Exchange, NSE-IX, which is a subsidiary of NSE. If we talk about the applicability on what all companies these rules are applicable. If I am a listed company in the Indian domain, am I eligible? If I am an unlisted public company, am I eligible? So Rule 23, Section 23 of the Companies Act says that it is applicable to unlisted public companies very clearly. Then listed companies are eligible, but subject to formulation of rules by IFSCA and SEBI, which is under process. Nothing has been is in public domain as of now. It is under process. I'm sure soon, very soon, by the time we have the next webinar on this topic, we will be having this domain open to us, wherein listed companies in Indian space will also be in a position to get listed on IFSC. But at the same time, there are certain entities which are just not eligible. A Section 8 company, a Nidhi company, a company limited by guarantee, a company wherein winding up proceedings have been initiated under the IBC, or a company which has defaulted in filing of annual returns or financial statements. Such companies are just not eligible for coming out with listing under direct listing route. Again, any company having a negative net worth is not permitted, and companies having outstanding deposits accepted from the public are also not eligible. Now, when we talk about what exactly is the benefit of this direct listing, number one, as I said, we are bypassing the domestic listing requirement, the requirement of getting listed first on the Indian exchanges and then migrating to the other exchanges, to the international exchanges, is being done away with by virtue of this direct listing route. Simultaneously, this is considered as a FDI. So every company has to be a bit cautious of their sectoral limits under the FDI route. And thirdly, we are operating in an internationally regulated system. So by virtue of which there is a win-win situation for everybody, the company, the investors, and the regulators. Where I've already covered in the present system, in the erstwhile system, dual listing was Indian company to get listed on BSE, NSE, and then go to the overseas listing. The new route, the direct listing route, allows any listed, any unlisted public company to directly access funds from the global investors and be listed in the GIFT City, in the exchanges in the GIFT City. Presently, Indian listed companies are not permitted to list on IFSC, subject to formulation of rules by IFSCA and SEBI. Again, I've mentioned that only unlisted Indian companies are allowed, private companies, Section 8 companies, this I've covered. Who will be investing? Now, a bigger question comes, list to main ho jaunga, I am eligible, I agree, my net worth is positive, everything I'm meeting. But then who will be the investors who will be putting in the money in the company? Only NRIs can put in the money. Foreign FIIs can put in the money, foreign companies can put in the money, and foreign individuals can put in the money. We as domestic retail investors, Indian investors, or domestic mutual funds cannot invest in the GIFT City, any company which is coming out with an IPO in the GIFT City. So that is an important aspect. As I said earlier, all these investments will be considered as FDI. So companies have to be a bit cautious about the sectoral caps as informed, as applicable under the RBI rules. As Pradeep said, already 220 market intermediaries are registered in the GIFT City, including 2 stock exchanges, clearing corporations, banking channels, depositories, brokers. So that means पूरा का पूरा setup available है हमारे पास if a company decides to go in for listing at the GIFT City. So the basic rule, basic law, IFSCA remains the basic law which will be governing authority, which will be governing all the products that will be registered there, all the services that will be registered there, and all the institutions which will be set up there. Every business being done there has a separate regulation. If we talk about airlines leasing, they have a separate regulations for airlines leasing. If we talk about AIFs, they have separate regulations for that. So IFSCA remains the roof of all the regulatory aspects. The pillars remain Companies Act, Listing Rules 2024, IFSCA listing rules. The way we have SEBI listing regulations in Indian space, similarly, there is a IFSCA listing regulations in the IFSCA domain. PMLA guidelines have to be complied with, and Companies Act and FEMA rules remain the punchline. They are the mother regulations which are needed to be complied with. Now, what is the benefit of the listing at GIFT City to the issuers or to the investors? Number one, for the Indian companies, it is a direct access to foreign currency capital pools. I'm able to access money from the foreign investors, NRIs, FIIs, etc., directly by virtue of the listing. Expansion of the international investor base. My investor base is expanding. Then elevated global visibility and brand perception. So if I, as a company, get listed, I'm a well-known business in India, I get listed on GIFT City, I go there and I get listed. Obviously, the visibility I'll be getting as a business, as a brand, is unimaginable. Then diversification of funding sources while bypassing the dual listing complexity. So being listed in the Indian space and then getting listed under the international exchanges, obviously there remain some confusions or complexity with regard to dual listing, which has been bypassed by virtue of this listing. Now coming to the operational gains to the foreign investors. They are getting trading frictionless. Systems are there for them. Extended trading hours aligned with global markets are there. हम में से किसी ने भी अगर बिजनेस चैनल्स देखे हो तो वो रात को 12 बजे भी ट्रेडिंग हो रही होती है गिफ्ट निफ्टी. So we know that they are being traded even on extended hours, internationally aligned disclosure standards and regulatory certainty via IFSCA. So these were some of my points. I would really want Shubham and Aditya to further deliberate on this so that we are in a position, we as consultants or we as merchant bankers as well, can help in setting up a better framework for the entire GIFT City to be popularized, more popularized, and make it a to-do thing for each of the Indian businesses. So, and they want to go ahead with listing at GIFT City. Thank you so much. Over to you, sir.
Okay, thank you very much, Anjali, for giving this. Now it's a time to Adit, your turn, then Shubham will speak. So over to you, Adit, and please tell us about you are managing Division of Fund and Regulation Policy. What are the ecosystem, how the fund things is taking place? Over to you, Adit.
Thank you, Pawanji, and Corporate Professionals team for giving me this opportunity. I hope that the screen is visible to you.
Yes, just do a slide board. स्लाइड शो मोड पे कर दीजिए तो इट विल बी. हाँ, यहाँ से यहीं से कर दीजिए. हो रहा है. Yeah.
Some problem.
If any problem, carry on.
Yeah. Or let me just restart this slide. Is this better?
Yeah, it is better.
Okay.
Yeah.
Okay. So I'll try to summarize the funds ecosystem in GIFT IFSC. Like Pradeep sir mentioned, this is one of those areas in GIFT IFSC where we have been able to get a early success, and the fund management entities in IFSC have shown a remarkable enthusiasm in picking up this opportunity and creating investment products not just for Indians to invest, but also for global and foreign investors to invest in India as well as in other foreign jurisdictions. Now, I understand that most of the participants in this webinar would be more aware with SEBI terminology of fund management related products. So in domestic markets, the fund management related products that we generally have available is mutual funds and exchange traded funds under SEBI mutual fund regulations. Then there are alternative investment funds or AIFs. Then there are portfolio management services or PMS under SEBI PMS regulations. And then there are the latest entrant in this list would be REITs and InvITs, for which SEBI rolled out regulations in 2014. Now, so with respect to all of these categories of investment products, IFSC also has equivalent products. So the mutual funds in India are known as retail schemes in IFSC. ETFs are universally known as ETFs. The alternative investment funds in India are known as restricted schemes in IFSC. Portfolio management services are also available here. The REITs and InvITs have been rolled into a single category, which is called investment trusts. So all of the products or investment products which are available to investors in India and for foreign investors who invest in India through these products, similar and equivalent products have been made available in the IFSC as well. And the major point of distinction here would be the fact that the different products in India are rolled out by SEBI at different points of time through different regulations. So for mutual funds, there is a mutual fund regulations which came out in 1996 and which has been recently revamped by SEBI in 2026. Similarly, AIF regulations in 2012, PMS, REIT, InvIT, all of these are separate regulations which have been notified by SEBI at different points in time. Having the benefit of this hindsight and in keeping up with the foreign practices of regulating the fund manager instead of regulating and registering each fund separately, what IFSCA has done is notifying a single unifying piece of regulation, which is called IFSCA Fund Management Regulations, wherein the approach that we have followed is that the fund management entity, the primary entity which undertakes the activity of fund management, is the one which takes registration from the IFSCA. And once registered, then depending on the category of its registration, it is allowed to perform different activities. It is allowed to offer different types of investment products to its investors. So what are the categories under which the fund management entities can get registered? So there are three categories. The first category and the widest category of all, which is the superset category, is the registered FME retail. Like the name suggests, this category of FME is allowed to deal with retail investors, and therefore this category of FME requires the most stringent of the eligibility criteria, which we will also see in one of the subsequent slides. So registered FME retail is the master key category in a way, in that once registered, the FME is allowed to do all the activities which are permitted under the fund management regulations. The next category of FME registration would be registered FME non-retail, in which only those activities are permitted where retail investors are not involved. So for example, a VC scheme, angel scheme, or an AIF, which is known as restricted scheme here, are those activities where retail investors participation is not permitted. So a registered FME non-retail would be allowed to do all of these activities. But launching a mutual fund or launching an ETF, since those require participation of retail investors, therefore those activities and those investment products are not permitted to the non-retail FME. The third category of the FME registration, which is a special purpose category, largely created only for the purpose of promoting venture capital and startup investments in IFSC, India, and foreign jurisdictions. So the authorized FME is allowed only to set up venture capital schemes and angel schemes in IFSC, and all the other types of investment products are not permitted to authorized FME. And the scope of the activities permitted to each of these categories is directly proportional to their eligibility criteria. So an FME which is allowed the maximum amount of activity in IFSC would of course be required to bring in more capital, more manpower, and would be required to comply with a higher stringent eligibility criteria as compared to the other category of FMEs. Now, what are these eligibility criteria? So a very quick recap of this is that in terms of legal structure, company, LLP or branch of company or LLP, all are permitted. The branch of a company or LLP is permitted only in such case where the primary entity is also involved in fund management activity. So if an entity in India or in a foreign jurisdiction is already registered with the regulator there, already doing fund management related activity, then it need not set up a new entity in IFSC. It can simply create a branch of the parent entity and take IFSC registration and start with the fund management activity. The other criteria, which is which also acts as a parameter of substance, is that of net worth. So for an authorized FME, like we discussed in the last slide, since the scope of activities is very small, therefore the net worth requirement for an authorized FME is only $75,000. For a non-retail FME, it is $500,000, and for a retail FME, it is $1 million or $2 million, depending upon the track record of the FME. Then the other criteria, eligibility criteria, is in terms of the manpower which is required in their IFSC office. So for an authorized FME, again the same logic. The scope of activity is smaller, therefore the required minimum manpower is also low, which is one principal officer. As we go up the ladder, the manpower requirement also gets increased. 2 for non-retail FME, and for FME retail, it is 3 key managerial personnel which are required at all points in time. Then there is also an additional requirement of increasing the manpower in parallel to the increase in the business activity. So if the AUM of an FME goes beyond $1 billion, therefore, then in that case, it is required to appoint one additional manpower. Then irrespective of its category, it is required to appoint one additional manpower. Then there is also a requirement of experience and track record, because the fund management entities will deal with third-party money. Therefore, as a regulator, to ensure that the entities which are taking third-party money and getting under the IFSC's registration, the regulations also prescribe the requirement for experience and track record. In case of authorized and non-retail FME, the requirement gets satisfied by the experience and qualifications of the employees of the FME. In case of retail FME, because it is money is invested by retail investors in the schemes floated by the retail FME, the criteria for track record is a bit stringent. They need to have either 5 years of experience in dealing with minimum 25,000 investors for an AUM of $200 million, or they need to have some person in control of that FME which has an experience of 5 years in dealing with at least 1,000 investors for an assets of worth $50 million. And in case the FME comes with the second eligibility criteria, in that case, the requirement for net worth gets increased from $1 million to $2 million. Apart from this, then there are usual requirements like satisfaction with the fit and proper criteria and infrastructure requirements, etc., which is also supposed to be commensurate to the business activity that the fund management entity does in IFSC. Now, what are the activities that the fund management entities can do in IFSC? So in one of the slides, we saw that they are allowed to float different schemes in IFSC. The majority of these schemes fall within these categories: the venture capital scheme, restricted scheme, which is similar to the SEBI registered AIFs, and the last category is retail scheme, which is similar to SEBI registered mutual funds. So in all of these categories, depending on different aspects such as the amount of riskiness of the investments involved, there are certain conditions which the regulations impose. So in case of VC scheme, the investments are required to be made only in companies which are startups or newly incorporated companies. That is why there is a requirement for VC scheme to invest at least 80% of its corpus in those companies which are not more than 10 years old. And since VC schemes would be investing in startups, therefore the minimum amount of investment in VC scheme is stipulated at $250,000 for each investor. But this minimum investment criteria gets exempted if the investor gets qualified as an accredited investor. And in this case, unlike the SEBI regulations where the accreditation is granted by a central agency, in IFSC, we have aligned with the global practices where the fund management entity does the due diligence of the investor and certifies the investor as an accredited investor. The minimum corpus in all of these cases, in all of the schemes, is maintained at $3 million. But considering the special nature of open-ended schemes, because open-ended schemes typically invest in listed securities, and therefore to allow them to start their investment activities at an early stage, they have been allowed to commence investment activities once they reach $1 million of fundraised. So they don't have to wait to reach $3 million in terms of overall corpus. They can start investments at $1 million itself. Then there is another flexibility which IFSCA has also brought in for schemes which cater only to non-retail investors, which are the venture capital schemes and restricted schemes. So the placement memorandum of all of these schemes is only required to be filed under a green channel with IFSCA. There is no vetting of the prospectus which is involved. So it is simply filing and taking on record by the IFSCA without any vetting, without any time being spent by the regulator in going through the documents and sending its comments to the FME. So this allows the FME to launch products to their investors in a very expedited manner. So and they can cater to the immediate requirements of the investors without having to wait for the regulatory approvals. And recently, SEBI has also adopted this concept under their Garuda mechanism, where they have also allowed the fund documents for an AIF to be taken on record without the requirement of regulatory vetting for those documents. However, the requirement of regulatory review of the documents continues to be there in case of retail schemes. The skin in the game contribution, which is generally refers to the amount that the fund manager is required to contribute to the scheme, is prescribed in all cases in IFSC, which is also one of the practices that SEBI also follows in its domestic regulations. However, in VC scheme and restricted scheme, there are certain scenarios which have been provided in the regulations, which allows the FME to seek exemption from the requirement of contributing in the scheme. Borrowing and leverage has been permitted under the VC scheme and restricted scheme, subject to adequate disclosures and comprehensive risk management. There are no restrictions in terms of the amount of leverage or the borrowing that these schemes can undertake. They can take as much borrowing as they want, as long as it is adequately disclosed in their placement memorandum, and there are adequate risk management strategies that they have in place to ensure that this leverage does not result into a problem. Retail schemes are not allowed to leverage that freely. There is a condition that they can take borrowing only up to 20%, and that also not for investment purposes. It is only permitted for meeting temporary liquidity requirements. Now, the regulations that we are seeing today is a long journey. It came across multiple steps, and while I'll not explain all of these steps because that would require a separate webinar in itself. But what I intend to emphasize with this slide is the fact that the regulations which came into 2022 were followed by a lot of separate regulatory frameworks, circulars, and amendments to the regulations, which each of them have resulted and catered to a separate area or a specific demand from the industry. So after the 2022 regulations, then there was a demand from the industry to allow angel schemes also in IFSC on the same lines that SEBI also allows under its AIF regulations. So in 2022 itself, IFSCA also rolled out its framework for angel schemes, and some of the features of that circular have subsequently been also adopted by SEBI under its revamped angel funds regulations. This was followed by another framework for distribution. Those who are from the fund management industry would probably be aware of the very important role that distributors play in ensuring that the funds are distributed to a wide audience, and that fund managers get access to investors not just in their immediate circle or in their immediate vicinity, but also across the globe. So realizing the importance of distribution as a key activity within the fund management industry, IFSCA brought out its regulatory framework for distributors. And unlike the domestic regime where SEBI does not register the distributor, in fact, it has delegated this activity to the MFI or the other industry bodies. Unlike that situation, what IFSCA has adopted is to directly register and regulate the distributors who intend to set up their presence in IFSC. So for those distributors who are present in IFSC, they are required to seek registration from IFSCA. But the fund managers are not just restricted to avail services of those distributors which are present in IFSC. The regulations allow them to seek services of those distributors also who are in India or overseas, subject to compliance with the code of conduct that IFSCA has prescribed. So this placed a critical missing piece in the puzzle, the distribution circular. After that, we have also launched in several other circulars, such as ESG schemes and sovereign wealth funds. One of sovereign wealth fund from the Middle Eastern region has already set up its presence in IFSC. You will probably be aware of Abu Dhabi Investment Authority, which has set up its office in IFSC for all of its India investments. Then there was a framework for accredited investors also. I think we've already discussed that in brief, that IFSCA has adopted a different approach from SEBI. In SEBI, for any investor to get qualified as an accredited investor, they need to get this accreditation only from a central agency. In IFSC, this accreditation is allowed to be taken by the fund management entity. There is no central agency which undertakes this activity. In fact, this is allowed to all the fund management entities with respect to their investors. Then in 2024, there was a major reform in terms of the investments by NRIs and OCIs. So for those who are aware, the FPI regulations mandates that the investment from a single NRI or OCI in a FPI cannot exceed more than 25% of the corpus of the FPI, and that the overall investment by all the NRIs and OCIs put together cannot exceed 50% of the corpus of the FPI. For IFSC-based fund managers, IFSCA and SEBI have exempted this requirement with respect to the overall contribution of NRIs and OCIs investors. So an IFSC-based FPI, which means that an IFSC-based fund can accept up to 100% investment from NRI and OCI investors without any non-compliance with the FPI regulations. So this is a major reform which has been done to allow seamless investments by NRI and OCI investors across the globe into the funds in IFSC. Then in 2025, Pradeep sir also mentioned this, that we undertook a complete overhaul and review of the 2022 regulations, and which resulted into the revised regulations called Fund Management Regulations 2025. In this review, a lot of areas where the industry had expressed concerns, or they had provided their suggestions or recommendations for further ease of doing business, while at the same time ensuring that the investors' interests are protected and safeguarded at all points of time. The 2025 regulations incorporated those suggestions, and subsequent to that, a lot of growth in the fund management industry has also taken place. One of the recent reforms after the 2025 notification was that of platform play. This is one of those reforms which obviates the need for a fund management entity to set up its office or its presence in IFSC. So for any entity which wants to do an activity in IFSC, there is a requirement for that entity to set up its presence, either by setting up a legal entity, a company or LLP in IFSC, or by way of a branch. But under this platform play reform, what we have allowed is that for fund managers which are based in India or in foreign jurisdictions and which do not intend to set up their separate presence in IFSC, they can also launch their products in IFSC. They can also launch their schemes, different type of schemes in IFSC through this model of platform play, which is officially known as third-party fund management services. All of these regulations, reforms, different frameworks which we discussed have resulted into a robust growth of the fund management industry in IFSC. From March 2023, when the industry only had 60 odd fund managers and 50 odd schemes, today in March 2026, we stand at 217 fund managers with almost 350 schemes. And these numbers are of March 2026. After that, the numbers have further grown. In terms of the business activities that these fund managers and these schemes have undertaken, So the commitments, the fund management industry, typically the category 1 and 2 AIFs work on the principle of commitments based. So these commitments have grown from $4.7 billion in 2023 to close to $39 billion in March 2026, which is almost 8 or 9 times growth in a span of just 3 years. And it's not just the commitments, but these commitments have actually materialized in the investments made. So if you look at the investments number, from investments of almost $1 billion in March 2023, the funds in IFSC have made investments of almost $20 billion as on March 2026, which is 20x growth in just a period of 3 years. In terms of the breakup of these schemes, so the 344 gross figure gets divided into different types of schemes, which we discussed in the previous slides. So angel and venture capital schemes constitute about 17 schemes in the total figure. The category 1 and 2 schemes put together are about 109. The category 3 schemes, which make up the bulk of the schemes in IFSC, are about 208. And the latest entrant in this of the investment products in IFSC is retail scheme. So there was some missing piece of puzzle in terms of taxation, which got clarified in the budget in 2025. In 2025, yes. And in last year and a half, we have witnessed about 10 retail schemes being launched in IFSC. These retail schemes, so if you look at the other categories of schemes, all of those are oriented towards investors who are accredited investors or sophisticated investors who typically invest in large amounts like $150,000, etc. But retail scheme is the only category which allows investors to invest as low as $1,000 or $2,000. So with the entry of retail schemes in the overall fund ecosystem in IFSC, now even the retail investors have the opportunity to invest in the funds. These funds are of both ways. Some of these funds are invest into India, and therefore these are largely meant for foreign investors who want to invest into India, and which we call as inbound funds. The other category is that of outbound funds, which typically invest in foreign jurisdictions, and these funds can find their audience either from investors in India or from other geographies as well. Apart from the investment schemes, there is also other activity of portfolio management services. Some 36 fund management entities are offering portfolio management services, and the assets under these services have reached close to $1.4 billion. Some of the key themes, couple of key themes which I would like to highlight before I end the presentation, is the investments into India. The first theme is the investments into India. So Pradeep sir mentioned that one of the key purposes for setting up of IFSC and IFSCA is to onshore the offshore, which means that those India-focused financial activities which had migrated to the offshore jurisdictions such as Singapore, Mauritius, etc. One of our key objectives as IFSCA, as the regulator of this jurisdiction, is to create an ecosystem to bring those activities back to the Indian shores in GIFT IFSC. Fund management was one of such activity which had migrated offshore, and therefore for investments into India, the foreign investors used to create fund vehicles in offshore jurisdictions such as, again, Mauritius, Singapore, etc. From those pooling vehicles, the money would be then invested into India. So the real activity, the value creation in terms of the fund management activity, custody, fund accounting, all of those were taking place in foreign jurisdictions while the investment was being done in India. So one of these, one of the ways in which we have tried to adhere to this principle of onshoring the offshore is to attract India-bound funds to GIFT IFSC. As you can witness, as you can see from this slide, close to 90% of investments which have been made by the funds in IFSC is into India, which means that the funds which are being set up in IFSC are primarily those funds which intend to invest into India. So those funds, those India-focused funds which were earlier being set up in foreign jurisdictions are now finding GIFT IFSC as a conducive jurisdiction for these fund management activities. The other theme is relocation of funds in IFSC. So relocation is when an existing scheme migrates or redomiciles from one jurisdiction to another jurisdiction. So one of the ways in which the fund ecosystem in IFSC has gained significantly is by relocation of the existing schemes from foreign jurisdictions to the GIFT IFSC, and these foreign jurisdictions include the likes of Mauritius, Singapore, DIFC, etc. So we have seen close to 24 schemes which have relocated lock, stock, and barrel from these foreign jurisdictions and set up in their presence in GIFT IFSC. These schemes have brought with them close to $14 billion in terms of cumulative commitments and have already made close to $8 billion of investments. Most of these schemes are India-focused schemes. And one of the ways in which this relocation has been made feasible is because the Income Tax Act allows such relocation to be done in a completely tax-neutral manner. So for those who are probably chartered accountants or are familiar with the Income Tax Act, they would have seen Section 47 of the Income Tax Act, where there is a concept of tax-neutral relocation of a foreign fund into a resultant fund in IFSC. So courtesy to that tax-neutral relocation provided under the Income Tax Act, a lot of schemes have taken this benefit and migrated from foreign jurisdiction to IFSC. With that, I come to the end of my presentation. And if there are any questions, we can take them now or probably at the end of the session. Thank you.
Thank you very much. Thank you. It was very nicely given and detailed, Adit. Thanks. And this presentation, please share with us so I can share with all the participants. Now, it's a time to Shubham Goyal to speak about the further aspects on this particular GIFT City topic relating to listing and other thing, and whatever remaining is there. Yeah, over to you.
Yes, so are my slides visible?
Yeah, this visible. Only do the slide share mode. Yeah, they're perfect.
Perfect.
Shubham, you are not visible.
Yeah, it's perfect now.
Okay.
Show his
So
slide. Yeah.
before start of the presentation, so just a brief overview about the jurisdictional comparison to give a more clarity, because you guys must have heard about that IFSC is an international jurisdiction and foreign
Yeah.
jurisdiction. So how this status was actually granted to IFSC. So if you see back in 2015, when this jurisdiction was formed, you could see various domestic regulators coming out with their own guidelines, own regulations. So there was a specific carve out to give this status an offshore jurisdiction. All the entities which are set up in the IFSC and are being recognized by the regulator, those entities were considered as PROI, persons resident outside India. Because of that, this entity, this jurisdiction becomes an offshore jurisdiction under the FEMA. But with respect to the other laws, whether we can say about the Income Tax Act, Companies Act, or maybe other laws, these entities are treated as the resident entities. So if you'll see this slide in terms of currency, we deal in the foreign currencies, the 15, 16 currencies which have been notified. But in terms of tax and the Companies Act, status remains as residents. That's why you see a number of notifications which are coming for the purpose of amendments in the Companies Act, amendments in the Income Tax Act. Every budget you see some of the announcement which happen for the GIFT IFSC. So basically under the Income Tax Act, there are the various carve-outs which have been made to give the treatment of kind of most favored nation for this jurisdiction. Now I'll directly come to the ecosystem of the capital markets. As I think ED sir had already explained about the GIFT IFSC, IFSCA, what has been the intent of setting it up, and what actually we are trying to achieve. So in terms of the capital market, you guys already do know about the funds, as Aditya has already explained. I would try to explain more about the market infrastructure institutions, capital market intermediaries, and one of the most important thing which we are going to discuss about, direct listing of the Indian companies as well as the foreign companies. As far as the ecosystem is concerned, we are having 2 stock exchanges, 2 clearing corporations, and 1 depository. So both the stock exchanges are the subsidiaries of the Indian domestic stock exchanges, NSE and BSE. Both are having 2 respective clearing corporations, again being the subsidiaries of the domestic MIH, and 1 international depository, unified depository for the securities market as well as the bullion market. So this depository works as a works as a unified depository for securities or and bullion markets. In terms of landmark achievements, if we can see Gift Connect, because at this point of time, if we see the majority of the trading on our stock exchange happens in the derivatives, as equity listing is yet to start, which I will cover later. In This Gift Connect has played a significant role for the trading of derivatives. This Connect was actually launched in July 2023. Before that, if we see, there was not much of the trading happening, there was not much of the liquidity. But after the inauguration of this Connect, we have seen around 100 billion of volume of the monthly trading volume on the gift exchanges. Before that, majority of the trading was happening because of the various schemes of the stock exchanges, where the brokers were trading on the prop basis. But after the inauguration of the Gift Connect, the actual liquidity has come in terms of the institutional participation from the SGX side, Singapore Stock Exchange, and also because of the remote trading participants which have been onboarded by NSE-IX, and also some contribution from the proprietary traders of the GIFT IFSC. Now about the regulatory framework for the capital markets, like you guys know very well about the fund management regulations. So I'm trying to cover here about the MIA regulations, CMI regulations, and listing regulations. And like Pawan sir, you had said that I need to cover a few things which are there in the ecosystem for the professionals. So you guys do know about this BATF ancillary. I've tried to cover a few things which are there in these regulations in the regulatory framework for the capital markets ecosystem, which can be advantageous for the professionals, because there are various opportunities which you can take advantage of.
Okay.
So in terms of regulations, MIA regulations, this is a regulatory framework for the market infrastructure institutions. So stock exchanges, clearing corporations, and depository. All these three are collectively called as market infrastructure institutions. So in terms of SEBI, you guys have seen the regulations of SEBI called as SECC regulations, stock exchanges and clearing corporation regulations. And there are another regulations for depositories and participants regulation. So basically SEBI SEC regulations plus the depositories and participants regulations, which are related for the depository, they have been combined into this MIA regulations. So this is a kind of unified framework for regulation and supervision of market infrastructure institutions. Then in terms of CMI regulations, you have seen the SEBI intermediaries regulations, and then there is a like respective regulations for each kind of intermediary. Like for broker dealers, there is a regulation. Then for depository participants, for investment advisors, research entities, credit rating agencies. This regulation is a kind of combined regulations of all those 9-10 regulations which have been issued by the SEBI. Very principle based. We have tried to bring a global flavor in these regulations. We could see various requirements which are benchmarked with our global jurisdictions. So this is a kind of combined unified regulations for all capital market intermediaries which are operating in the GIFT IFSC. Then third one is about the listing regulations. So this listing regulation of 2024, this has actually repealed our previous listing regulations which were there in 2021, issuance and listing of securities regulations. Again, if I'll compare with this with SEBI, then this is a combination of SEBI ICDR plus LODR plus issue of that non-convertible securities. So this does have the provisions for issue of equity, issue of debt securities, and also the continuous listing obligations, which are covered in SEBI LODR obligations. So again, if you see all these three regulations combined of SEBI, they might go around maybe in the 1200 pages. Here in the listing regulations, these listing regulations have been very principle based, have been benchmarked with our global jurisdictions, and I think you can get these listing regulations around 70 to 80 pages, the English version. So again, like ED sir was saying about the consultation for this listing regulations, which was actually nominated by an agency called CIVES for the best consultation thing. The reason was that in these listing regulations, we have tried to incorporate the best practices of the global financial centers, like what is there in the Singapore in the Catalyst, what is there in the Singapore main board, what is there in the GEMS in Hong Kong, what is there in the AIMS in the London. So we have tried to incorporate the best practices of all these global financial centers, and we have tried to go beyond what we can think. So sometimes if it is not very rule based, what SEBI prescribes, where maybe the disclosures in the offer document will go in like 30 pages. We have tried to become as principle based as possible and to provide the flexibility to the issuers, investment bankers, so it becomes possible for them to come here and to raise capital. Because again, this is something which was announced by the finance minister in July 2023. The enabling rules, like explained by Anjali madam, Those were notified by the government in January 2024, and equity listing is yet to happen. We have seen a couple of offer documents filed with our stock exchanges and also with the IFSCA. And one of the offer document has been filed very recently and is also under process, is being examined by the stock exchanges. Because of these regulations, we see that that equity listing can happen very soon, and GIFT IFSC can see a lot of success in terms of equity listing. This is majorly about the opportunities for the professionals in the capital markets, like in terms of CMI regulations, like the CMI regulations which we have revised in 2025. So it has been made mandatory to substantiate the requirements, because ultimately the tax benefits are available here and we want the substance to be there. So it has been made mandatory that at least there should be a principal officer and the compliance officer with requisite qualification and expertise. So basically, postgraduate having an experience of 5 years and a graduate with an experience of 10 years. So postgraduate with an experience of 3 years and graduate with an experience of 5 years. This is something which we have made it mandatory, along with the other certification requirements, which IFSC makes it mandatory for these professionals. So again, the professionals who are having their requisite qualification, requisite experience, they can always come to the GIFT City. So there are around more than 700 entities under the capital markets ecosystem. Where these opportunities of being a principal officer and compliance officer is available. And again, as Aditya explained earlier, that there are more than 500 entities in the funds ecosystem in terms of fund management entities and the alternative investment funds. So there is a lot of opportunities in terms of the professionals who are looking for playing a role of principal officer or the compliance officer in the GIFT IFSC. Then again, in terms of the audit, this is majorly for the practitioners, chartered accountant, company secretaries, and other professionals who actually provide their services to the ecosystem. So in terms of compliance audit, internal audit, system audit, and maybe the inspection by the third party, which IFSC can make it mandatory for the other institutions. So there are various opportunities which are available for the practitioners in terms of various audit requirements, which are there under the CMI regulations. So this is the number of the intermediaries. So this number has increased a bit. So we can see around 150 entities registered with the IFSCA at this point of time. Additionally, there would be around 15 global access providers. So again, these kind of requirements provide the opportunities for the professionals about various things. Similarly, about the MIA regulation, those regulations were issued in 2021, which we amended in 2024. And we have come out recently with the master circular for the MIAs also, in which you will find the various requirements in terms of the system audit, internal audit, and other certification requirements. So again, this is some of the opportunities for the professionals in capital markets. Then this is about the products. Like I said earlier, that we are having majorly the derivatives product at this point of time, because the equity listing is yet to happen. Then in terms of corporate bonds, like ED sir had explained earlier, that we have been quite successful in terms of the Indian issuers listing their bonds on the IFSC exchanges for the purpose of external commercial borrowings. One of the reasons for that has been, again, being the taxation, the withholding tax requirement. So whenever an Indian issuer, if they are going to make a payment of the interest to the non-residents, then there is a concessional rate of withholding tax. So let's say if it happens on the domestic exchanges or any other part of the world, and if Indian issuer is going to list, then the tax rate will be as per the tax treaties, which may vary from 10%, 5%, or maybe go up to the 20%. So if there is in any country and the investor is coming from there, and Indian issuer wants to raise capital from that from that, then interest payment can have the withholding tax can be of the 20% if the tax treaty specifies so. So in terms of being listed on the GIFT IFSC exchanges, that rate comes down to 9%, which significantly reduces the cost of borrowings for cost for those investors to invest into those bonds. So this has been one of the biggest reasons. And also, if you see our listing regulations and also the requirements for the stock exchanges, that have been very fit for purpose. So it has not been very detailed requirements, which generally happens, because we have seen majority of the institutional investors participating in such bond listing. So again, very suitable ecosystem has been there for the bond listing, which has seen around listing of the bonds of more than $70 billion. In terms of other initiatives, I think you guys must have heard about various brokers coming to GIFT IFSC in recent times because of the framework that IFSC has introduced last year in the month of August. about the global access. So there are a number of investors in India, resident investors, who are interested to invest into the global securities. So this was something which was happening from India, but not in a very regulated manner. So there were SEBI regulated entities which are providing these services, but various requirements of SEBI were not applicable in terms of disclosures, etc. So no investor protection framework of SEBI was applicable if you are investing into the global markets in comparison to the domestic ones. When IFSC issued this circular, then there have been various requirements which have been made applicable in terms of the disclosure, in terms of the audit, in terms of the disclaimer when the person is logging in. So like if you are logging in on the Ind Money before August or September, maybe you were not seeing the risks which are related to the global markets. Now, if you try to log in today, maybe there will be a disclaimer which will be popped up on your screen, which will tell you that there are currency risks, custody risks, and all these risks which are available, which are there if you are going to invest in the markets. So because this market has become the regulated when the entities are there in the GIFT IFSC, so it is a kind of a win-win situation for the brokers as well as the investors. Broker can set up the shop here. They can be under the regulated ambit of IFSC. They can avail the tax benefit of 20 out of 25 years. For the investors, they will be subject to the investor protection framework of the IFSC. They will have more disclosures from the brokers. They can take up their issues with some regulatory bodies. So it's a kind of a very win-win situation for investors, for the brokers, and for the ecosystem. Because now we have seen very large brokers setting up shop in the IFSC. We have seen interest from various international brokers who are coming to the IFSC, which ultimately goes towards our dream of onshoring the offshore. Then in terms of direct listing, the recent and very significant initiative of the government and also of the IFSCA for listing of Indian companies as well as the foreign companies. So this was the announcement which I had spoken about earlier in July 2023 of the finance minister. Because of this announcement only, in January 2024, those LEAP rules and amendment in NDA rules were announced, which Anjali Madam had explained earlier. So if we'll see the whole chronology that how this direct listing has been enabled, because Indian companies were not permitted to list on any of the international exchanges. And if they want to raise the capital in terms of their equity, the only available route was the depository receipts route, which has also not been very successful in last 7-8 years. So if you'll see the whole chronology, first of all, it was started by SEBI when they had constituted an expert committee. That committee had actually recommended that the listing of the Indian companies on the foreign exchanges should be permitted. And because of those recommendations and the work which was going on earlier before IFSCA had come, the amendments were made in the Companies Act in 2020. But those amendments were made effective only after the announcement of the Honorable Finance Minister. And because this direct listing involves not only the listing of Indian companies, only of the listing of unlisted Indian companies, but also of the listed Indian companies. Just after the announcement, a working group was constituted under the chairmanship of ED-IFSCA, having various representatives from the market, and that working group had submitted its report in November 2023. After that, government had announced the amendments in the LEAP rules and NDI rules, making it legally permissible for the Indian issuer to list on the IFSC exchanges. If you see those LEAP rules and NDI rules, the modifications have been made in certain way that only the IFSC jurisdiction, only those and on these international exchanges in IFSC are eligible for the Indian issuers to list. So this shows the government assurance and the commitment towards the IFSC that only this jurisdiction has been enabled as of now to list the shares of the Indian companies. After that, as I told earlier, that we revamped our listing regulations, benchmarked our listing regulations with the global jurisdictions. And because of those listing regulations being in place, now we can see a full-fledged regulatory framework being in place for the listing of foreign companies and unlisted Indian companies. For the listed Indian companies, we are still waiting for some of certain amendments from the SEBI. So we are very closely working with the SEBI to make the listing of the listed Indian companies. So basically, maybe after 6 months or maybe in a year, we can see that Indian listed companies listing on the IFSC exchanges if everything goes as per the plan. I think these notifications of the direct listing, NDA rules and LEAP rules have been explained by Anjali Madam. So I'm skipping these slides. So this is majorly about the listing regulations, because I have skipped few slides which were pertaining to the NDA rules and LEAP rules, because Madam had already explained about that who is going to be the eligible company, who is going to be the permissible holder. because resident Indians cannot invest into the listing of Indian companies, resident Indian companies, because of being the potential regulatory arbitrage which government can think of. But in case of foreign companies, if there's a listing of any foreign company on the IFSC exchanges, then resident Indians can also participate, including the domestic mutual funds. So in our listing regulations, we have considered our ease of doing business thing and the global best practices and the ISO principles, which actually envisage for the true and correct disclosures by the issuer, the information being available to investors, etc. These listing regulations, like I had already said, this covers the listing of the securities as well as the financial products. Last year, we had come out with a circular for enabling the listing of commercial papers and certificate of deposits also. So this not only covers the listing of securities, but also of the permitted financial products like commercial papers and certificate of deposits. In this, you will also find the chapters about listing of SPAC and listing of depository receipts also. So in terms of eligibility criteria, like you can see 3 criteria being mentioned here in terms of revenue test, profit test, and market capitalization test. If you will see the domestic regulations of SEBI, you can find the eligibility criteria which is based on the net worth, based on the revenue, based on the profit. But there is no eligibility criteria which is based on the market capitalization. Like I mentioned already that we have tried to benchmark it with the global best practices. So if you'll see the listing rules of the Singapore, you will find an eligibility criteria which will be based on the market capitalization. So this is how which we have borrowed it from the Singapore. Maybe there could be the startups who might not be complied with the revenue criteria or maybe the profit criteria, but after the listing, they will be complied with the market capitalization criteria. So these are tracks with the various startups to list on the IFSC exchanges. In terms of the offer document, for the small offer size, like if the offer size is less than $50 million, so only the filing will be required with the IFSC, but the company will not be subject to the observations of IFSC. So you can just file with the stock exchanges. You can take the observations of the stock exchanges and make the suitable modifications, and after that you can go ahead for the listing. Again, in terms of disclosures, if I've tried to include the brief disclosures requirement in this slide. Again, if you see about the material disclosures, we have mentioned, and that materiality policy. This materiality policy, the issuer can decide as per its own policy, which can be approved by its governing board. So they can make the disclosures in the offer document, what kind of information they have considered the material. It can be based on their contract size, based on their net worth or turnover. If it is properly disclosed in the offer document, based on the same, they can make the disclosures in their DRHP, and the investors can take a call based on that. So there are no rule-based requirement regarding the materiality policy. In terms of the financial statements, the issuers have been given the flexibility to prepare their financial investments as per the Ind AS, US GAAP, or the IFRS. In case they are not being compliant with any of those, then they have to restate their financial statements to making it comparable with the IFRS. In terms of offer timing, there is a period of 12 months in which the issuer has to come out with the offer after the issuance of observations of the IFSCA. In terms of the offer period, which is generally 3 to 4 days in India, we have given the time of around 10 days for which the offer can be kept open because of the non-residents being participating in these offers and time taken for the remittance of funds, etc. In terms of pricing, both the options are available, whether it can be the fixed price or it can be the book building. But as per the NDI rules for the Indian companies, they need to follow this book building route because it is mentioned in the direct listing scheme. But for the foreign companies, both the mechanisms are available. In terms of minimum public offer, like in India, you have seen the requirements of this minimum public offer, which is generally 25%, but because of the threshold that can come down to like 2.5% because of those recent amendments which have been made. In case of IFSC, for the foreign companies, we have specified a straightforward threshold of 10%. And also for the Indian companies, amendments have been made in the SCRR to make it 10% for the unlisted Indian companies. So at this point of time, if we talk about the IFSC jurisdictions, the companies which are going to be exclusively listed on IFSC exchanges, MPS requirements remains at 10%. In terms of underwriting and in terms of other obligations such as related to the monitoring agencies, they have been kept optional for the issuer. So because of the cost which has been involved in that, but proper disclosures are to be made in the offer document for all those things. In terms of lockup period, we have given the lockup period for the promoters and controlling shareholders for 180 days. Like in other jurisdictions, we have seen this being varied from 180 days to period of 1.5 years. Like in domestic jurisdictions also, it is quite more. But this is what we have tried to keep it quite flexible for the investors which are there before listing, so they can make an exit after a suitable period of 6 months. In terms of advantages, again, these advantages were also explained by Anjali Madam earlier. So for the purpose of the issuer, we can say, because for the Indian companies, they will have the whole world which can invest in that except the Indian residents. So they get an expanded investor base along with the global visibility, because then you can list on those international exchanges in the IFSC. And because the markets being open for more than 20 hours in a day, so investors from all around the world can participate in the offer. They can invest during the secondary markets. So this gives them the visibility, along with an added advantage that there is no currency risk, because the trading happens in the foreign currency. So this will be an added advantage for the issuers as well as investors. Again, no capital gains tax and no STT and no CTT. So for the non-residents who are going to trade the equity shares on the IFSC stock exchanges, there is no capital gains tax. And irrespective of whether the person is resident or non-resident, there is no STT, no CTT. So even if the resident who is going to invest in the foreign company, there will not be any securities transaction tax. He will be subject to the capital gain tax, but not of the securities transaction tax. In case of non-resident, there is no STT, there is no capital gains tax. So because recently the securities transaction tax has been increased in the domestic jurisdiction. So for the non-residents who actually trade in the derivatives here in the IFSC, that has been a very advantageous situation, because of that their cost of trading becomes very minimal, and the break-even point becomes quite low in comparison to if they're trading in the global exchanges or even on the domestic exchanges. So this has been a very good advantage in terms of taxation. For foreign companies, there are some additional benefits, because they can take capital from the residents also, even the domestic mutual funds. So residents can invest under the LRS scheme of the Government of India up to $250,000. Domestic mutual funds can invest in those companies, but again, subject to that limit of $7 billion, which has been there for the mutual funds to invest into the overseas securities. For the residents who will be investing in the foreign company on IFSC exchanges, they will be subject to the taxation requirements, very similar to like when they invested to the global access. So there will be the requirements under the laws of that foreign company, that they will have to withhold the tax and other things. So they will have to show their incomes as foreign income. They will have to fill that Schedule FA, which is required to be filled under the ITR. And again, they'll have to claim the tax credit, very similar to when they are going to invest through IND money and all. So that mechanism will remain same. That will be treated as a foreign income. In terms of LODR, listing obligation and disclosure requirements, again, very principle-based disclosures. There are requirements which are there for the listed issuers. Some requirements when they have to disclose it on the immediate basis, like the results of the board meeting in which the substantial decisions are being taken in terms of corporate actions, etc. Then some quarterly disclosure requirements in terms of the deviation statement, the report of the monitoring agencies if they have appointed one, and other things. And then some annual disclosure requirements on the stock exchanges in terms of their financial statements and annual reports. This is a kind of checklist which we have prepared. So if an issuer who wants to list on the IFSC exchanges, how they need to go about it, like from appointment of intermediaries to the drafting of the document and the filing of the same with the stock exchanges and in the IFSCA, then public comments, and till the post-issue thing, like filing of the post-issue report and compliance with the observations of the IFSCA. Now, in terms of listing of debt securities, about which ED had told initially that we have been quite successful attracting the Indian issuers. And like Sir had mentioned that after 1 year, I think we can see a lot of foreign issuers. We have seen already some multilateral institutions like ADB and IFC listing their bonds on the IFSC exchanges. We have seen some foreign companies for the secondary listing, especially from Sri Lanka, like DFCC Bank. Maybe in 1 year, in next 1 year, we'll see a listing from the foreign companies. In last 5-6 years, we have seen substantial growth in terms of debt listing by the Indian companies. Now it's the turn for the foreign companies. If we can bring them to list on the IFSC exchanges, again, then it could be a significant initiative, like significant success, like which we have seen in terms of Gift Connect, in terms of our fund management entities, because this is very much aligned then with our dream of like onshoring the offshore, the vision for which IFSC has been created. Then again, about the disclosures with respect to the debt securities, again, very principle-based disclosure. The disclosure requirement which are related with the issuer, related to the issuer, and also with the issue. In terms of the issuer, the general information, risk factors, the controlling shareholders, the directors, material outstanding litigations, and again, as per their materiality policy, which they need to disclose in that information document. No rule-based requirement for such materiality policies. Again, in terms of the issue, details about the risk factors, proposed usage of the proceeds, and the maximum amount of issuance in case of medium, if they are going to issue the MTNs and all. Again, ESG labeled bonds, like Sir had mentioned earlier, that we have followed the international taxonomies. So we have not provided the detailed guidelines in our listing regulations, that how you need to utilize your proceeds to get labeled as a environmental, social, or governance related bonds. You can follow the international taxonomies as may be specified by the ICMA, ASEAN standards, climate bonds standards. So you can follow those taxonomies. You can disclose it then in your offer document to make it available for the investors. We are also having the concept of the sustainability linked bonds, in which some additional disclosure requirements are there. But again, we have tried to make it very feasible for the investors, that they can follow the taxonomies of the international jurisdiction, and then they can list the bonds on the IFSC exchanges. So that has been the reason that we have seen around 25% of our total bond listing being related to the ESG related bonds. In terms of other disclosures, like some pre-issuance disclosures and some annual disclosures, which they have to make on the stock exchanges for the information of the investors. Like I said, for the sustainability linked bond, there would be some other disclosure requirements, because ultimately these are linked with the some key performance indicators of the issuer, because they are ultimately going to make some kind of investments in the projects, which will ultimately lead to the sustainable projects. So some more disclosures with respect to the KPIs for the sustainability linked bonds. Then about the debt listing, so these figures are a bit old. We have seen around more than $70 million of bond being listed on the stock exchange in IFSC. In the last months, we have seen around 6 to 7 issuers listing their bonds on our exchanges. In terms of ESG labeled bonds, the number is more than $16 billion, which shows our success in this ecosystem in a very short span of time. So that's all from my side. So I think we can take the questions like Richard mentioned already.
Thank you very much, Shubham. Thank you. I have few questions which I want to just take up. The first question is, how GIFT City help for NRI for investment?
So like I had told you earlier about this thing, because this jurisdiction was created with the vision of onshoring the offshore. So I will first talk about the products which are there in the capital markets. So because of certain advantages which are there in this jurisdiction, this becomes a go-to jurisdiction for them. For example, if they want to invest in some of the products on stock exchange in IFSC, so there will be some products, like they can invest in the derivatives products. So because the derivatives which are there on the stock exchanges, they will be USD denominated. So there will not be any kind of currency risk, no capital gains tax, no securities transaction tax. There are, at this point of time, unsponsored depository receipts of US stocks are listed on the stock exchanges. So this is a kind of innovative product which was launched by NSE IX, in which residents can invest and also the non-residents. So if you are actually interested to invest into the US market, so more than 50 stocks are listed here on the IFSC exchanges in forms of depository receipts. And it's not like that you have to invest into the one share of Alpha or Meta, in which like you have to invest into substantial amounts. They are divided into the 50 or maybe the 200 depository receipts. So ultimately you can take a fractional ownership of that US stock, and you will be entitled for all kind of corporate actions. Okay. So these are the kind of benefits which are available in terms of the stock exchanges, the products which are available on the stock exchanges. Then the other initiative which we have brought in terms of the global access. So they can actually take the advantages of the brokers which are here in IFSC jurisdiction, who in turn are having the tie-up with the foreign brokers to invest into the global markets. So again, this IFSC, which was created with an intention to make this as a hub for the offshore transactions, because if you see the global financial centers like Singapore, it's not like the brokers who are sitting in the Singapore, they are only trading on the Singapore stock exchanges. They actually trade all over the world. They actually provide this kind of facilities. So we have tried to create this jurisdiction as a hub for the resident as well as the non-resident investors to make their investments in IFSC and also outside the IFSC.
Okay. Whether instrument can be an NRI in Europe? Who are the NRI of countries not allowed to invest in GIFT City? Whether resident of India allowed to invest in dollar received from their NRI relative?
So I think I can understand this question that they are asking about the NRIs trading in different currencies. So like I had mentioned that we have permitted around 15 to 16 foreign currencies, but I think trading in our stock exchanges has been in US dollar at this point of time. So it depends. But again, in terms of deposits and other facilities with the banking, our banking units, they do provide the facility in the notified currencies which have been notified in our regulations. For the opportunity by the residents to invest in this market, I had explained about the taxation arrangements, etc., other things. So they cannot invest into the listing of the Indian companies and the derivatives, because the trading in derivatives shall be prohibited under the LRS, because they cannot invest into the leveraged products. In the Indian companies, they cannot invest because of the restrictions under the direct listing scheme, but they can invest into the listing of foreign companies. They can invest through this global access program when they are going to invest outside India. But again, the taxation treatment shall differ.
Okay.
And Adit, if you want to say something about the funds and all those things about the NRIs and the residents, the opportunities
Yeah,
which are
Adit, you can
available
add.
in the fund management ecosystem.
Yeah, so I think I already touched upon that. IFSCA and SEBI have jointly worked on a reform under the SEBI FPI regulations, where the limit on the NRI and OCI investments in a FPI, which earlier used to be 25% on an NRI level, single NRI level, and 50% on at the fund level for all NRIs, OCIs put together. That limit has been exempted for IFSC based funds on the overall NRI OCI contribution level, which means that a fund in IFSC can invest up to 100% of its corpus from NRI OCI investors for investing into Indian markets, which is otherwise not possible for a FPI based in, say, Singapore or Luxembourg, because they would be required to cap their NRI OCI contribution maximum up to 50%.
Okay.
In this way, the funds in IFSC can act as a major conduit for NRI investments into India.
Okay. Adit and Shivam, anybody can give answer. In case of overseas investment, the issuer entity with broker are sitting outside India. What are the checks and balance IFSCA has ensured for investor protection in case of any dispute of fraud by issuing entity?
So basically, if we'll see the listing arrangement by the issuers on any of the exchanges, it is always like that. There is not a requirement for the issuer to be located in that jurisdiction. So if you are going to permit for a company which is incorporated in another jurisdiction, they will be outside that. In terms of investor protection, if you'll see, this listing of the companies is always managed through the disclosures which are there in the draft offer document, which are filed with the stock exchanges in the IFSCA, and later on the requirements with respect to their listing obligations and continuous disclosure requirements. So again, whenever we talk about the listing, it is majorly based what information you have provided to the investors and what kind of checks and balances there after the listing. So if you see our listing regulations, I think we have tried to cover almost every aspect, and also being the principle based to make it very clear for the issuers and also for the investors that the appropriate mechanism is available. And in terms of the investor protection, I think they will be for the in terms of the investors, they can always take it up with the that broker with whom they are investing in these kind of securities. Because that brokers which are there in the IFSC jurisdiction, they will be subject to the consumer protection framework of the IFSC. they will be under the ambit of consumer protection framework of IFSC.
Okay. How easy for an NRI to open a demat account with broker dealers in IFSC? How much time it takes, and what are the steps IFSCI is taking to make process easy and faster?
So I think if you see about the account opening processes, whether it's the bank account or maybe the demat account, IFSC has taken like significant steps in the past. Like recently, IFSC has permitted the VC process, video customer identification process, from like 35 jurisdictions. Because in an account opening process, I think substantial time goes in terms of the KYC of the customers and all other things. We had come out with our AML safety guidelines because again, like I mentioned, that we are resident for all other purposes other than the FEMA. So PMLA and the PML rules are applicable in this jurisdiction. So our AML safety guidelines, they have been prepared as per PMLA and PML rules with certain modifications which we could have made to onboard our non-resident and NRI customers. And recently, after permitting this VC process, we understand that there has been significant reduction in the account opening process, whether it's a bank account or maybe the demat account.
Okay. Just tell me, then IPO gift, can a SEBI registered merchant banker act as MB, or it is registered with IFSCI needed?
So investment banker needs to be registered with IFSCA, but SEBI recently has permitted that investment banker can set up its shop in the IFSC in a SBU form. So basically, earlier there was a requirement that they need to make a separate company and then they need to take registration with IFSCA. Here they can just form a branch network they can maintain at their parent level, and then they can take registration with IFSCA. But again, they need to be registered with IFSCA. Not
Okay. Indian national investor cannot invest in all of the gift IPO.
So for the Indian companies, they cannot. For the foreign companies, they can, yes.
Okay. Okay. It is necessary to subscribe in demat mode only. If yes, with whom to open the and what are the formality? I mean KYC needed.
Yes, so you need to maintain a demat account. This is a mandatory requirement that you need to have your shares in demat form. So there are around 11 depository participants in the IFSC with whom you need to open a demat account. Basically, the brokers, which you would know. In terms of opening formalities, etc., like I earlier mentioned, that KYC will be required. But again, in terms of KYC, we have come out with certain reforms like this VC, then KRA, KYC Registration Agency, which may have the interoperability with the SEBI registered KRAs. So if your KYC is there with the domestic brokers, that KYC can be fetched here to reduce that time, and so that the time can be reduced for that opening of demat account. But that connectivity is yet to happen between the IFSC and SEBI KRA.
Okay. For global investor in IFSCI, mandatory to open demat account with IIDI. Is it okay if they have account with global depository and trading happens with connection with IIDA with global depository?
So if you want to trade on the IFSC stock exchange in IFSC, then you need to have your demat account with the depository, basically in terms of equity or depository receipts. That connectivity between IFSC depository and ICSD is still not been there. This is something which is work in progress.
Okay. How many issues are in pipeline and have come of IPO issues, equity IPO?
So like I mentioned earlier that one offer document was filed earlier in the month of March, but because of this geopolitical tension, that IPO could not go through, and ultimately it was withdrawn because of the undersubscription. But there has been another offer document which has been filed of one of the foreign companies of US.
It will take time to do this. Anjali, you have any question on this?
Sir, with regard to just now Shubham said that with regard to foreign companies, Indian investors can invest.
Yes.
Indian retail person can invest. So will our KYC norms or will my existing demat account be operatable in that jurisdiction as well, or I'll have to have a different demat account with IIDA?
So different demat account needs to be opened.
Different
so
separate.
you have to.
Okay.
So demat account needs to be opened in this IFSC jurisdiction for making an
Fine.
investment on the companies which are listed on IFSC.
Okay. Okay. Is there any minimum you told me about this thing, MPS 10%,
Yes.
but is there any minimum subscription as well applicable?
So we have not specified any minimum subscription requirement. So the
Okay.
issuer can specify in its offer document. Like you will see this offer document which has been recently filed, they have just specified only 10% of the fresh issue as a minimum subscription.
Oh,
So it is upon
okay.
the issuer. So they can disclose in offer document. So like it's not like 90% which is there in the domestic jurisdiction like
Right,
this.
right.
So again, very principle-based regulations.
Okay.
Okay, okay. Now it's a time to close this, and I think Pradeep has given the right platform and right starting, and Adit and Shubham added to this, and Anjali also gave a bigger picture. Before concluding the session, I just want to take views starting from Anjali about the Gift City, Adit and Shubham. So Anjali, your take on this subject.
Sir, I am a capital markets person. I really want time where in the way we have 5,000 listed companies, 7,000 listed companies in Indian space. Likewise, in the times to come, have similar number of companies listed in the gift city as well. And more so allowing the Indian listed companies as well to get listed in the gift.
Okay, okay. Adit, your view on this?
So I work in the authority which is regulating this space. So of course, I would always wish well to this jurisdiction. And apart from my personal wish, it is also the fact that as a principle of its working, IFSCA has adopted to benchmark itself with the global jurisdictions. So Pradeep sir also mentioned in his remarks that for us the competition is with Singapore or Luxembourg or the foreign jurisdictions. So in that respect, I think all of our policy proposals are benchmarked with those jurisdictions, and at the same time also take into consideration the unique aspects of being in India, being a new jurisdiction. So with all of these things in place, I think we are on a good path. Yes, thank you.
Okay. And Shubham, your view?
So, because I have worked extensively on this listing part, we have actually tried a lot in last 3 years that we should try to make this possible. And like I told that our listing regulations, which we had drafted, so this was again from this point of view, what an issuer wants, what an investment banker wants, and what an investor wants. So we had tried to make it in such a way that it becomes actually possible. This becomes a hub, like this has become a hub for the fund management industry. This is becoming a hub for reinsurance. Now we want to make this as a hub for listing of the global companies to come on the IFSC exchanges.
Okay.
So I would say that again, because sometimes we become a bit impatient about this stock exchanges ecosystem. If we'll compare this with even the global jurisdictions, I will tell that maybe in the other exchanges also the equity listing has not been very successful. Whether we see it in Dubai or maybe in the SGX, it's not like that. It's not like that in India that there are thousands of the companies which are listed. Because we see the Indian market, which has been very vibrant. I think sometimes we start compare this jurisdiction with the Indian market. So again, it's I think a matter of time. Maybe when we'll do the next webinar in the next year, maybe we can see some 3-4 companies being listed on this IFSC exchanges, and again one attracts the other. Maybe in next 3-4 years we can see this full-fledged ecosystem of the listing of the Indian as well as foreign companies.
So thank you very much. Thank you, Shubham, giving this a different perspective. And important thing is that this is a new area. The ecosystem has to develop. And always I have seen, because I have participated first day in the NSC trading, and I remember my boss, he told me, "Ye nahi chalega." Okay. So that is the always, and then slowly things has taken total change. And now we have seen how the online trading has taken over. But always these types of new thing will succeed when the surrounding ecosystem developed. Today professionals are not aware. Today companies are not aware. Today foreign investors, foreign people connected to like leasing and other thing, they are slowly knowing. And then very important point which Pradeep has mentioned, that what is the expector? Why should I not go to Singapore? Why should I go to Gift City? Now these things will develop and will communicate, and people will come and take advantage. And Gift City should also be on the toes to attract more investor, more people, more fund. And I think this will be the future of India. And every professional, every company must look into this, not thinking that this is not connected. Otherwise, you will miss your bus, which you can get it today. So with these things, thank you very much to all for participating. Pradeep in absence, Shubham as it, for giving a detailed presentation on GIFT City. And this is the topic which is emerging, and we will organize more program on this, which will be very useful for everyone. Now, as you are aware that our knowledge sharing journey is continue. So on 10th July, next webinar of 270 will be on decoding term sheet. Because when you are doing transaction, you have to make term sheet, and term sheet is the most important document. Other thing follows term sheet. So we want to discuss, we want to suggest how to make term sheet, what are the important ingredients, what you should not miss out, what you should write, what you should not write.